wanna la la la. I wanna la. I wanna la la la. I wanna la. I wanna la.
Welcome to JSE Sens'd. This is where we make sense, so you can make sense.
This video is not intended and must not be used or taken as financial advice. If you need personally tailored financial advice, do the right thing and reach out to your authorized financial advisor. It takes a lot more to provide financial advice than just a social media video. This video should not even be taken as educational material. JSE Sen'd is strictly for commentary purposes only. If you need educational material, we do have classes. Our WhatsApp line should be in the description box below, and also our email address. Reach out to us if you'd like to join our classes for educational purposes. But JSE Sen'd is strictly for commentary purposes only. The first company we are going to talk about is SAB Zenzele with a ticker symbol SZK. So if you hear me say SZK going forward, I'm talking about SAB Zenzele, right? So what is SAB Zenzele? This is a company that was spun off from the success of SAB Zenzele. What is SAB Zenzele? SAB Zenzele was a BEE transaction by AB InBev and SAB. They wanted to give value and ownership to their employees, their partners, and the qualifying public, which is previously disadvantaged groups, since it's a BEE transaction, right? So the SAB Zenzele, which was the original transaction, has performed so well that they have decided that they are going to replace it when it matured. They're going to replace it with SAB Zenzele, right? And they also listed it on JSE. This happened in May 2021. So today, the 9th of June 2025, SAB Zenzele has released a declaration of a special dividend number 4 announcement on Sense, right? I just thought I should give you a little bit of context of where the company is coming from. So let's talk a little bit more about this company. How does it make money? SAB Zenzele only makes money by a way of dividends from AB InBev. That's the first thing we need to note here today. And since it trades on the BEE side of JSE, this side has lower trading volumes and it attracts fewer institutional investors, the big money, right? So it means the price of those companies on that side of JSE, their share prices are not so liquid. And SAB Zenzele was once trading at a high of 220 rands per share. And today, as I'm making this video, it's trading around 37 rands per share. Well, it was trading at 220 rands just after they have listed it on JSE. Maybe because a lot of investors had hopes and they thought since this is coming from a very successful BEE transaction, it's going to continue with the success. But to their surprise, it started coming down since then and it has never went back up again. And it's currently trading at 37 rands per share. So how much did they declare as their special dividends? This is actually the second biggest dividend they have declared, but it's only 41 cents per share. So imagine if you bought shares in SZK in June 2021 when it was trading at 220 per share. If you bought 2 shares, you probably spent around 440 for 2 shares. And today they are going to pay you 82 cents dividends on your 2 shares. So yeah, I think this one particular company is going to need a serious miracle to bounce back, but that's what I think. Remember our disclaimer and don't make decisions based on this one video alone. The second company we are going to talk about today is OMNIA Holdings, aka OMNIA Group, with a ticker symbol of OMN, right? So OMNIA has released a declaration of an ordinary dividend and a special dividend. So just before I get to telling you just how much they have declared for dividends, let me give you context for those that may not know what OMNIA does, right? So OMNIA improves soil health and crop yields with advanced fertilizers and agri-bio products for the agricultural sector. OMNIA develops sustainable explosives for safer and more efficient blasting for mining companies. That's a second sector that's completely unrelated to agriculture. They also manufacture and distribute specialized chemicals for various industries. That's another sector. So OMNIA has 3 different subsidiaries dealing in different sectors. And they have declared dividends at 4 rands per share. That's the ordinary dividend. And an extra 2 rands 75 cents per share as a special dividend, bringing the total to 6 rands 75 cents. And dividends in South Africa have a withholding tax of about 20%. So if you own 1 share, you are not going to receive the full 6 rand 75 share. They're going to subtract the 20% dividend withholding tax. But all in all, OMNIA has declared the 6 rand 75 as their dividends in total, the ordinary and the special dividends. So OMNIA has a history of paying good dividends, right? If you look at their dividend history, they have a history of paying good dividends, and whenever they can, their dividends are increasing, right? Which is something to note. Their average true high or all-time high ever was 172 rands per share. And as of today, OMNIA is trading at only 73 rands per share. Part of the reasons why they have had this major sell-off from 172 rands per share to only 73 today is because they took on huge debt levels, which might have scared off some investors, and they started selling the stock. At the lowest point it was, back in 2020, OMNIA was trading at just 12 rands per share. So since 2020, at 12 rands per share, OMNIA has went up about 500% to 73 rands per share now. Do you think OMNIA has the capabilities to go create an all-time high above 172 or not? And so, let's fly onto the third company. The third company we are going to be talking about is PPC Cement, with a ticker symbol PPC. I'm sure most of you know this one, it's very popular. PPC today released their annual consolidated financial statements for the year, and they also made a cash dividend declaration. So if you may not know, PPC is currently on a turnaround strategy, and they even came up with a name for their turnaround strategy. They call it awaken the giant. I'm going to share with you two main reasons why the PPC is currently embarking on a turnaround strategy, but the reasons are actually a little bit more than that. There's just these two biggest reasons I couldn't ignore, right? The first reason is because PPC had a multiple layered management, if you know what I mean. The organizational structure wasn't clear. It wasn't a CEO and subordinates, and the chain of command was also not clear, right? Because when there's a multiple layered management like that, even responsibilities sometimes can be overlapping, and this will result in the decisions being taken not being efficient, and sometimes it will also cause delays in decision making because it's not clear who runs the show, right? So that's the first biggest problem, and that's one of the main things the turnaround strategy is focusing on, fixing the organizational structure, right? The second reason is because of the competition that came through and started challenging their pricing. I remember reading an article where PPC was complaining about cheaper imports coming into South Africa, pleading with the government to do something about that in terms of tariffs or taxes on those imports. We grew up with PPC, man. I only knew PPC as the cement company up to a few years back, and you started seeing a lot of other name brands coming through. And yeah, PPC as a result lost their market dominance and they had pricing challenges. So with this little bit of context, that's why PPC is currently on a turnaround strategy. So the turnaround strategy has seen PPC this year in these annual financial statements. They have came back to profitability, right? And they also have some free cash flow, right, before financing activities. So that's something to note. PPC also has an approval for the new state-of-the-art plant in Western Cape. They're going to start construction maybe late this year or early next year, but the construction has already been approved and everything is ready to go, right? So the revenues for PPC, when you go through the financial statements, have decreased, and it's due to PPC Zimbabwe. So PPC is operating in 3 different countries. It's in South Africa, it's in Zim, and it's also in Botswana, right? So the revenues in Zimbabwe dropped so hard that it affected the total company's revenues. I'm making this point to say the earnings have increased. So the revenue could decrease, but the earnings could increase. That's just something to note from PPC. And they increased across all regions. The earnings before interest, taxes, depreciation, amortization. In short, EBITDA. That's the one that has increased across all the regions. But the revenue for the group has went down slightly, and it's due to the revenue that went down in Zimbabwe. So the all-time high for PPC, the highest trading point it was ever at, was 35 rands per share in July 2007. And it's currently trading at almost 5 rands per share. And there's a possible technical analysis breakout if you really examine the charts, but I don't know if it's going to happen or not. And considering competition and the intentions that are in the turnaround strategy, I can say PPC needs a lot of luck and time to really give us a new all-time high, meaning for the share price to go past 35 rands per share. Imagine if you once were trading around 35 rands and you are now currently trading around 5 rands per share. That's a big drop. And this drop is attributed to these reasons that I'm sharing. Part of the reasons, actually, because there's several more other reasons, but the main biggest reasons are the multiple layered organizational structure, the management, and the challenges with the competition. So it makes you wonder, what can they do against the competition, because they are here now. It's not like you can wish them away. I get that they can do something with their organizational structure, but the competition is here, and PPC is no longer dominating the market as it used to. So do you think the turnaround strategy will actually see us going past the previous all-time high or not? So that's it for PPC. Let's check out the fourth company. So the fourth company we are going to talk about, coincidentally, is 4SIGHT, with the ticker symbol 4 as in the number 4SI. So 4SIGHT came out with a trading statement. A company issues a trading statement when it has a reason to believe that their headline earnings per share or their earnings per share are going to be 20% higher or 20% lower than the previous period. It's actually a requirement by the JSE. It's a requirement that if a company has a reason to believe that their headline earnings per share and earnings per share are going to change by 20% or more, 20% or less compared to the previous period, they have to issue a trading statement, right? So 4SIGHT came out with that trading statement, and before I tell you whether it's a positive trading statement or not, let's just go through a couple of things. Like I said, the JSE requires these companies to disclose when the EPS or headline EPS is 20% higher or 20% lower compared to the previous financial year. So 4SIGHT all-time high, the highest price the shares were trading at was R2.90, and it's currently just trading at 73 cents per share. So 4SIGHT expects their earnings per share and headline earnings per share to increase by more than 20% compared to the previous financial year. So when we have a statement like this, we call it a positive trading statement. So a positive trading statement can boost the share price as it attracts investors and vice versa. Meaning if it's a negative trading statement, it's going to scare off investors and the share price risks falling, right? So the EPS, earnings per share, and the HEPS, headline earnings per share, are two most important profitability metrics, with an increase suggesting that a company has a strong performance, a decrease, vice versa. So like I said, the average too high or the all-time high for 4SIGHT was at R2.90, and it's currently trading at around 73 cents. So yeah, I think this company, it needed a trading statement like this. It was much needed. So part of the reasons for the big drop was because 4SIGHT's own management was selling their own stock. Nobody likes that. Nobody likes a company whereby the management of that same company are selling the shares. It means they don't believe in what they are managing, or they know something, you know. So the reason it moved from R2.90 per share to now trading at 73 cents per share was part of the reasons was because the CEOs and the directors themselves were selling the company shares. So investors were like, why would I buy if the managers are selling? Nobody likes that. So I don't know, man. 4SIGHT has now came out with a very positive trading statement, and I've seen another article talking about 4SIGHT buying out another tech startup, a smaller technology company right here in South Africa. So I don't know whether that company is going to have a positive contribution into 4SIGHT or not. But yeah, man, they have a positive trading statement, and I don't know whether the management is back to buying the stock again or they're still selling or what. But what do you think? Do you think 4SIGHT has the capabilities to give us a share price that is upwards of 3 rands maybe per share? And the 5th company we are going to talk about in this video is, drumroll please, this is the last one, BARLOWORLD. So BARLOWORLD is edging nearer and nearer to being delisted of the JSE and the A2X. There is a company that wants to take over BARLOWORLD, and they are going to delist it, remove it from the stock market and have it as a private company, and it's edging very near that point. So BARLOWORLD today, jointly with the new company that wants to take it over, issued a joint statement because the Competition Commission has came out and also issued a positive recommendation for the transaction. When the Competition Commission issues a positive recommendation, it means it's advising the Competition Tribunal to consider approving the transaction, right? So let me give you a little bit of context. On 11 December 2024, NewCo, this is the company that's taking over BARLOWORLD, right? They call it NewCo. NewCo announced its intention to take over BARLOWORLD, and they wanted to pay 120 rands per share for each BARLOWORLD share. And then after that, there was a meeting held around 26 February 2025. The shareholders were supposed to either accept or reject the 120 rands per share offer, right? And some shareholders, big shareholders, they refused. They didn't want to sell, right? They thought their shares are worth a little bit more than that. I remember with one company coming out and saying they would consider selling if NewCo is offering at least 130 per share, not 120. And mind you, when NewCo came out and offered 120 per share, BARLOWORLD's share price was trading way less than 110 rands. I think it was 105 or 106. I stand to be wrong, but it was less than 110 rands per share. And NewCo offered 120 rands per share. But one very big shareholder still refused and said, I think my shares are worth a little bit more than that. At least if you can offer me 130 upwards, then I'll consider it, right? So on the 26th of February in that meeting, the shareholders refused to sell. And when they refused to sell, it triggered a standby offer. So there was a standby offer depending on whether shareholders agree or refuse. So they refused, and then it triggered the standby offer, right? And then one of those shareholders was actually PIC, Public Investment Corporation. It's government owned. But then it started showing commitment to accept the standby offer with a BEE condition and several other conditions. Like they said, okay, if you meet these conditions, then we are more likely to accept your offer. So we had PIC and then PIC. I think it was two very big shareholders. It was PIC and another private company. So PIC signaled that it has intentions to accept only if the NewCo company taking over BARLOWORLD meets certain conditions, right? And then it left that other shareholder alone to refuse selling. So today it was announced that Competition Commission supports the takeover, but it also has triple BEE conditions that the taking over company needs to meet before it could fully be approved, right? But I think it's also worth noting that NewCo, the taking over company, is very much prepared to meet those triple BEE conditions. It has zero problems. It has all the intentions to meet those conditions. So at the end of the day, the ball is in Competition Tribunal's court to approve, provided all conditions are met. So BARLOWORLD is currently trading at 107 rands per share, still less than 110 rands. And this company that wants to take over wants to pay 120 rands per share. The share price right now, as I'm making this video, is around 107 rands per share, right? So I already mentioned that the company is prepared to meet the triple BEE conditions, and PIC is also interested to sell, provided that the new company will meet the PIC's conditions. So could this be the end of BARLOWORLD as a publicly traded company? Could we really see BARLOWORLD being delisted and being ran as a majority black-owned company, but still a private company off the stock market or not? Stay tuned to find out. This is JSE Sens'd, where we make sense so you can make sense.
Time my J's cold, Tangeray cold. If you do like me, you already know. Fuck the low. I tie my J's cold, Tangeray cold. If you do like me, you already know. Fuck the low.